this presentation is only for educational purpose. Before making any decision based on the information shared, please check with your financial advisor. All right, so finally, a sharp cut in the indices. Both Nifty and Sensex shed nearly 2% each. So earlier, we were seeing markets drifting gradually lower during the corrective phase. So it's a decisive, close on the downside comparative to what we were seeing in the previous weeks. So earlier it was the marginal 0.5% gain to 0.5% loss, but this time around it was nearly 2% kind of a cut. So as you can see that the majority of sectors were under pressure, wherein media, financial services, energy, metal, and banking. They were the major culprits. At the same time, defensives alongside with auto, they showed some resilience. FMCG, auto, and IT, they managed to end on a positive note. When it comes to gainers, so in line with the sectoral performance, like FMCG counters, HUL, Britannia. Then we have two stocks from the auto space, Hero MotoCo and Tata Motors. And lastly, one bank, Kotak Mahindra, which managed to end in green. At the same time, Shriram Finance, Titan, Dr. Reddy's, L&T, and Adani Enterprise. These are the top 5 losers from the Nifty 50 basket. So, all in all, it was decisive break, decisive week for the indices, where we saw strong closing on the downside. Now, let's see how the market is going to pan out next week. This is the daily graph. Last week, we were here around this area, and we talked about this zone, this lower band of this rising channel acting as a strong support. So last time also, if you remember that we penetrated this zone for a brief with this green candle, but the same day we resumed the trend, and thereafter we retested the record highs. But this time around, it's a decisive breakdown of this trend line of this rising channel. Plus, this zone also coincides with another short-term moving average, that is the 50 days of exponential moving average, which index has slipped below. So now, what is next? So after this, 4 or 5 months of steady up move, though we couldn't manage to gain much from this upside, because we were here around 21,400 and again around 22,200. We've almost reached now after this marginal retracement. So after this decline, after this breakdown, we feel that the tone, which was earlier positive, means on the declines, if we were buying, we could manage to see a newer highs. Just to give an explanation, means after this move, a marginal retracement, then a new high, then marginal retracement, a new high. This time it was swift, but we managed to hold the trend line support, and then we retested the upper band. This time also it happened in the same way, but we couldn't surpass the previous high. So this break has completely changed the tone, the texture of the market. So what is next? This 21,800. So for the next entire week, I would rather say that 21,800, 21,800 spot is going to be the make or break level for the markets. As long as we are holding above 21,800, there will be a possibility that we might see an attempt of recovery towards 22,350 or higher. Otherwise, we have this whole ground till 21,400 to 21,200 open for a decline. So after this, breakdown, bias has shifted. 21,800 is very close to that, current mark. But since the bias has shifted, we would rather take a stance wherein we'll wait and see, how we are going to behave around 21,800. So we are assuming that we're going to test this level soon. And how the market is going to perform once we test that zone is going to be the major litmus test. So 21,800 is something that one should keep a close eye on. And this decline with rise in the volatility index, if you go back and see our previous webinars, I guess in the starting of the April month, we discussed about a sharp cut in the volatility, the India VIX, but that index have risen almost vertically from 10 to now 17 to 18 zone. So volatility index indicates fear, indicates possibility of volatile swings in the market. So with the rise in volatility and a cut in the prominence trend, clearly warrants caution. So in short, chances of index drifting further lower is high. 21,800 is something that's the next critical support. Now let's talk about banking. So earlier, if you remember that we were watching that banking index might continue to outperform because we had this strong green candle on the previous breakout. But soon this entire move has faded out. So earlier the pace of decline was gradual, but after this decline, we are seeing that we have engulfed the entire move in line with what we were seeing earlier. So the expectation of outperformance from the banking index has also subsided now. So that is another negative that we see in the market. And it's all going on when the global markets are very conducive. Means the US markets are again, inching towards their record highs. But our markets are not showing any sign of breather. So what is next for banking? This 47,100, that will be the immediate and next support. And if it breaks, then 46,200 zone will be the next crucial support for the banking index. Upside around this yellow line around 48,300, 350 zone, that's going to be the first hurdle, and then major around this 49,200. So private banking majors specifically, though they are trading mixed, but PSUs is something that barring SBI, I've seen very sharp cuts. So avoid PSUs for a time being now, especially for the short-term trades on the long side, and please do not add to your loss-making position, which we anyways recommend as a basic rule of trading. So this is about banking. Now let's talk about stocks, which should be in the focus. So at the beginning, we talked about a couple of sectors which are showing strength. Auto is one such sector. Within the auto space, Ashok Leyland, we've discussed about this stock a couple of webinars ago, and we were here. Then we've seen a sharp move to this 205, 206 level. This pause, healthy pause of 1.5% kind of a cut, is a healthy pause, especially in a market like this where Nifty slipped nearly 2%. So if it continue to consolidate, it gives you an opportunity to look for accumulation opportunity. So first the sector, then stocks. So auto as a sector looks okay to us. So this is one such space. Apart from Ashok Leyland, Hero MotoCo was among the top performer. Then we had Tata Motors. So auto as a pack is overall doing well. So Ashok Leyland could be the one counter which can be on your radar. Next, FMCG space, Marico. Almost 4 or 5 years of consolidation has ended. As you can see, that stock was trading in a range, but this week we have seen a very sharp break, 13% kind of gains. And look at the volumes, exponential rise in the volumes. So we had a similar pattern earlier, if you remember, that when we discussed about AB Capital a few weeks ago. So despite the negativity, we are still seeing certain pockets holding well. So Ashok Leyland first, second is Marico. Lastly, Weak candidate, IndusInd Bank. So banking has we were seeing certain pockets holding well. But now with this trend line breakdown in IndusInd Bank, it clearly shows that at least we're not going to see the outperformance. Was holding well in the past instances. In fact, in the recent attempt also, it was trying to hold this level, but finally we have breached that mark. So if there'll be any shorting opportunity, it could be from the banking space. IndusInd Bank is the name. So with this, just to sum it up, our view is negative when it comes to both Nifty and banking index. 21,800 is the make or break area. Below 21,800, we have enough room for the downside. If it manages to hold, the recovery is going to be very gradual. 22,350 is going to be the next critical hurdle in case of recovery. Banking also looks subdued. The 47,000 mark, 46,300, that is the area where one should be looking for buying. Private banks is something that one should prefer. PSUs avoid except SBI. Stock specific, we talked about Ashok Leyland, we talked about Marico, which are showing strength, and then we have one candidate like IndusInd Bank, where there's a clear-cut breakdown. So with this, the presentation ends. Now we'll do a quick feedback poll, and then we can start with the Q&A. So please fill in your feedback, and then you can start posting your question using that Q&A button. Please restrict your queries to the sectors, not individual stocks, so that we can wrap up this webinar on time. Please quickly fill this feedback, and then we can start posting the question using the Q&A tab. We already have few questions lined up, so please fill in your feedback so that we can start with the Q&A. And again, I request please avoid stock-specific queries so that it benefits the larger audience. We are preparing for the next week, so if we have an idea about any particular sector, it will be easier for us to identify stocks automatically. All right. Start with Q&A now. Okay, so first question on sector, that why the banking index is falling. So why part is not that we are addressing here. We are more concerned about the what part, means what is going on in the market right now. So earlier, we were anticipating when the bank Nifty made a new high, that it could outperform the index. It is even if there'll be a decline. But the underperformance in the private banking majors, specifically SDFC, that is currently weighing on the sentiments. So we feel that we should not bother about the why part if we are looking for short-term trading opportunities. We should rather be worried about what, means how we can stop the damage to our trading position. So if the trend is negative, we should be acting accordingly. And if we are seeing a steady up move, we should not take contrarian trades. So as of now, the trend looks negative. So we should look for shorting opportunities, and that's why we discussed about IndusInd Bank, where we have seen a fresh breakdown. Okay, next we have Devashish Ghosh on power sector. So power sector was in news last week. Plus the earnings season is going on, so we are seeing excessive volatility across the pack. So I feel that barring the defensives, means FMCG, pharma, selectively IT, and auto. Rest of the sectors, they might continue to trade volatile because we have had a phenomenal surge across the power space. So there could be a phase of breather or consolidation or profit taking. So for a time being now, especially if the view is short term, one should refrain from any position in power space. Okay, so next is Snehanshish Pal on do you think that the FMCG sector will continue to do well till the election? So indications are in the favor that yes, this particular space, after a prolonged underperformance, can do well, uh, especially selectively. Some of these stocks like Marico, we talked about Britannia, Colgate. Then we have, select other names like Imami. They are doing well. So yes, indications are in the favor that even they might not outperform the market, very strongly, but the performance is likely to be on a positive side. What will be the next forecast for IT space? A question from Mr. Uday Kumar. So, in fact, IT, I've been very closely eyeing the possibility of reversal in the IT space altogether. So, we have had certain signals earlier, but uh, especially in the IT majors, we are not seeing further damage. This is positive. At the same time, we are not seeing recovery either. So I feel it's a phase of accumulation, for the IT space, for the IT majors specifically. But mid-cap IT is something which is still reeling under pressure. So I feel for the next 2 to 3 months, one should be focusing more on the IT majors instead of mid-cap IT names and accumulate them gradually. Okay, Dr. Urvi Shah has question, power sector can we add now? Dr. Shah, as we have discussed about the entire space reeling under pressure. So it's not the time to start accumulating because we have hardly seen any correction in these names, the top names which were performing earlier, like Tata Power, NPFC, REC. It's a marginal retracement. Plus, the market trend is down. So that is another negative that we have to deal with. So as of now, I'll not be jumping into any short-term trading position, especially in the stocks which are witnessing profit taking after a very strong performance. So to be honest, I'll be okay buying them at a higher rate, but with a confirmation, but not the current levels when they are declining. Okay, next question from Mr. Nitin. Those are stock specific query, but again, I'll address from the sector specific point of view that PSUs, banks are something that we recommend to avoid. So, barring SBI, all the other banks are really under tremendous pressure. So, one should refrain from any short-term bets until we see some sign of bottoming out or a reversal. Okay, Snehanshi's Pal, again, we have a question that since last 4-5 months, Nifty is in 21,800, 22,800 basket. Again, we are low. Before this, so we have already breezed that range, Mr. Pal. I guess you missed the presentation. We've shared this during the presentation. That if you are saying that this particular level 21,800, yes, in a way, it's definitely a very critical support. But as per the channel that we were seeing in the market, that has definitely we have breached and we have closed decisively below the same as well. But yes, 21,800 is going to be the critical support. Okay, next, again, stock specific queries. Irrigation sector, Mr. Benjamin, we are not seeing any sign of agri-related stocks witnessing any strong traction, though there are certain pockets on the stock specific front we are seeing reaction. So as of now, we feel that there's nothing as such in the agri space which attracts our attention. So as of now, again, I'll be suggesting to stay safe and prefer defensives if the view is short term. Okay, can we buy bank stocks now? So that depends. If you are thinking about making investment, that's a different issue. If you are thinking about in the short term perspective, let's say for a week or two, then I would rather prefer to wait and see, how the market's going to pan out around 21,800 for the bank Nifty index and similarly around 47,000 for the banking. Okay, stock specific. Okay, so one query from Mr. Athav, those stock specific will answer this from the sectoral point of view, that how the metal stocks are looking to us. So metal, they're still holding strong, but it's not the outperformance that we are anticipating, because uh, we are seeing volatility in metal space also. They are comparatively better. So if I'll compare it with the banks, or the other sectors which are falling like nine pins, metals are still holding strong. Select stocks like Tata Steel, Jindal Steel, JSW Steel, they have not seen any major correction yet. So yes, one can look for buying opportunity if we see the traction coming in back in metal space in the next week. As of now, they are on the avoid list. Okay, next, what next? All right. So again, Mr. Jha, as we have mentioned that we are avoiding the why aspect of why it is happening. We are more concerned about the what part, that what is going on in the market or in the stock. So when it comes to banking, we have shared our view is clearly negative, and the index majors among the banking majors, HDFC is one of the prominent name which is not showing any sign of sustainability at the higher levels. So there are multiple factors to this. Largely, after the merger of both entities, SDFC and SDFC Bank, we are seeing this negativity panning out in the banking stock. So that might continue, is what the indications are. So from the short-term perspective, please don't mix. Why I say this, that the why part and the what part, because when we mix trading with investment, it completely derails the entire philosophy that on which we position our trade or investment. So please don't mix both. Investment is different, trading is different. So if you have made investment, look for the longer time horizon, at least 9 months to a year. If you are concerned about shorter than that, then you are looking for short-term opportunities. So in that case, you have to follow the trend. So for the trend, it's negative. So one should avoid SDFC Bank for a time being now. All right. All right. So next, the query that we have on yes, cement space. So cement as a space is doing well comparatively, yes, because if you see that some of these stocks, they are still holding closer to their record highs, though they are not witnessing any sharp recovery, but at the same time the pace of decline is also very uh, gradual. So for a time being now, again, if the view is short term, one should avoid. If you're planning for investments, definitely some of these top performers like Ultratech, ACC. Yeah, these are the top two names rather which one should be focusing on. Okay. Mr. Chan, so basically we are not suggesting any stock or sector to invest here. The idea behind this webinar is to share you the information. What is the structure of the market? We have shared few names, stock names also, like Ashok Leyland, Marico, wherein we are seeing strength. So depending upon your own discretion, your risk appetite, you can plan this strategy. But we are not recommending any stock ideas here. Same holds true for the investment also. So if you're associated with us, of course, you can send an email to us through the branches, through the business partners, and we'll definitely answer the queries related to any stocks related to the investments. So with this, we have answered all the queries, I guess. Yes. So thank you everyone for joining in. And next week, same time, same place, we'll connect again. Next week is going to be a special one, because on 18th, that is on Saturday, we're going to have again a special session from the index, from the markets. So we'll talk about it in detail on Friday. But the session is going to be on Friday, not on Saturday. So we'll connect again. Thank you.